Good morning, everyone. Welcome to the Quantum Leap Morning Leap session for Wednesday, September the 14th. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the market, macro to micro, take a look at the structure of the market, drill down to our trade levels, our targets, and our main hypotheses for the day. We do create multiple hypotheses as we do not know what the market is going to do, but we create a plan for what the market does do so that we have multiple trade plans in place for what the market throws at us. This is a subscription room. If you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. This is just us doing this live each day in the pre-market and then live trading analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so yesterday our main hypothesis was a rotation up into the 39 to 43 area, maybe 46 area, and then we were looking for the market to roll over and continue down towards that 21.1050, with our main target on hypo 1 being that 23.50, and on hypo 3, which was the continuation hypothesis of the 21.1550 with a late day probe down into the 21.1050. They kept, hypo 1 played out. Then we were thinking we were going to get hypo 3 kicking in. We got down to the 15. We did not get the continuation, the late day probe down into the 21.1050. They found balance down here, and they basically chopped into the close in around that 21.1975. News today, we have not much in terms of scheduled news. We did have import prices. They came out a little bit worse than expected, 0.2 versus minus 0.1. The big news today will be the crude inventories. Other than that, the key to this week is the fact that we are coming into quad witching on Friday, and then we also have the two-day Fed meeting coming up next week. So we're probably going to be in a hold pattern coming in. There's going to be some rotations up and some rotations down as they come into this expiration at the end of the week. Taking a look at the macro very quickly. I always like to start my day with a long-term candlestick chart with a 9 EMA and a 20 SMA. I'm looking for slope and separation, where it's being challenged, and where we are within the different trends and the different time frames. The monthly looks very strong right now. We've got beautiful multi-year slope and separation, strong trend up. Then at the end of 15, beginning of 16, we challenged that, but then we took it back, and right now we've got slope and separation and a continuation pattern as a possibility. We did come down this month for the first time to the 2100 and a quarter to test the 9 EMA, but since then we have bounced. So the continuation pattern is still in play. On the weekly, a little bit different. After this record run in the weekly, we finally rolled over. We came down, got below the 9, and right now we're challenging the 20, and we've taken back 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 weeks of gains in a single week, actually almost in a single day, and now we're chopping around, but we're holding the 20 SMA so far, but we are seeing the first signs of weakness coming in on the weekly. Going down to the daily, a little bit of a different story. We've got a rollover going. We do have slope and separation to the downside. We failed to get back above after the big day down on Friday. They tried to take it all back, but we failed the 9 on the Friday, and so far on the Tuesday we failed again, and we've moved down, and we've got the possibility of the start of a trend down on the daily. Going to the intraday, same thing. We've got a strong downward push. We are coming up and testing the 9 and the 20. We've lost some slope, some separation. So they are coming up to challenge this trend, close the small technical gap that we had on the 4-hour, but the trend is still down on the 4-hour. Going to the 1-hour, we're finding some consolidation here. We're back above the 9 and the 20 right now, and we're going sideways on the 1-hour. We do have a naked cross above us up here at 2141.50. So just note that on your journal. If we get above and hold above the 9 EMA and we get above, we've got an ascending triangle going on right now on the bigger picture. If we get above this 2130 area, I'm looking at the 3150, then you could start to target this 2141.50 area. Going to the 30-minute, you can see this triangle. We've got a symmetrical triangle on a shorter time frame. We've got an ascending triangle on a larger time frame. This is the key trend line to keep an eye on today for a breakdown. And basically, if we get below, I'm looking at the 2120 area, but depending on which we break. If we break above this 27, look for them to come up and test the 30 area, and then if we get above the 30 area, we could get some continuation. But again, expecting a lot of rotation today. Going into the 15-minute, you can see this pattern a little bit clearer. We do have a little bit of slope, a little bit of separation possible, start of an upward trend on the 15-minute, and then on the 5-minute, you can see that we're breaking out of this symmetrical triangle right now and looking for possibility of going up. We are above the 9 and the 20, but we don't have any separation. We do have a little bit of slope. So they're trying to make a move up, but it's a weak move right now, so they could easily take it back. Going to the big picture, you can see that we're in this this no man's land, this gap zone that we created on the breakout from the long time frame balance that we were in earlier in the year, and then we broke out, gapped up, and then created these distribution zones above. But right now we're in this thin area of the profile. You can see we're starting to fill it in right here, and right here it's not as thin as it was 3 trading days ago, and we still got a lot of work to do. Key information that we have right now for the microcomposite is the if I move this back, we did have the microcomposite VPOC up here at 2151.50. It shifted down yesterday to the 29 and a quarter area, and then at the end of the day it came down here at the 2120 area. We have a V-shaped profile happening on the microcomposite, and then we've got this this 36 and 31 area that we've got to watch. So the key level is going to be this this 37 above us. If we can get outside of the value, then you've got a nice trade up into the 2140.50, where we've got that naked cross at 41.50, and then if we can get above this 42.50, then we could get the move back up into the 2151. If we can't get above the 30.75, look for them to just chop around more in here and fill this area in around the 2120 area. Key line in the sand below is going to be the 2107. That puts us below the 3-day microcomposite and coming in below this gap zone that we closed out yesterday, and then a move down would be expected down towards the 2100 and a quarter week low, and down to this 2098 area. And then the key support area is going to be that 88.50. Anything below that, we're looking for the move down into that 20.80 50 area with naked VPOC and naked close in the 85 and 83 area. So let's take a look at the overnight. Overnight session, very, very strong Gaussian distribution. Very nice bell curve, a lot of wide rotations throughout the night, but basically we balanced out, and this is a very good-looking Gaussian distribution. Currently, right now, the Globex VPOC is 26.75, but if we come down here, it might shift down to the 25 or maybe even the 23 where we shifted up from. But overall, the inventory overnight is neutral and rather balanced. So if we take our overnight information, let's take our overnight high at 29.75. Our overnight low at 21.25. And then currently right now, our VPOC is at 26.75. It might shift, but we don't know that yet. And then other than that, there's no other information because it's very balanced, it's very neutral. So we'll get rid of it, expand this out. So right now we're trading just inside of yesterday's value area. High value area low is going to be 17. That's going to be a trade area for us, 17.25. The 26 really, I don't think it gives you any real information. What I'm looking at is this 31. It's the LVN from yesterday. We've got a bit of a B-shaped profile from yesterday, which is long liquidation. And I'm going to be using the 31 as a key line in the sand. Well, a warning, call it a warning line. I can't really call it a key line in the sand because we're likely to go up there and test it. But we're going to call it a warning line. Why do I always do that? What's really going to be our key line in the sand above is going to be that 37.25. I'm actually going to move it up just slightly to the range high at 39. And then I would be targeting that 40.50. 42.50 as a trade area, and then above 42.50 I'd be targeting the 52.25. Well, this whole area up here. Right now our 20-day ATR is running at 20.35, so off of the 21.25, our daily upside ATR is at 41.75. And so far, our downside ATR is at 28.75. No, that can't be right. $8.75, sorry. All right, and then we've got a trade area at the range low of 12.25, targeting the low from the other day at 10.10, the daily ATR, and then our key line in the sand below is still the 21.07, and below that we're targeting the 04 area and the 2100. It's actually 21.25, and below that 98, top of the gap zone at 97, down to 95.50, the bottom of the gap, and the next big target below is still down here in the 20.80.50. So what is my main hypothesis? Our main hypothesis is an open auction in range, a rotation down into the 1975 area, coming back into this microcomposite VPOC and the HV end of the lower distribution here, and inside the main distribution from yesterday, chop around in here, and a push down to the 21.10.50. Our main target for the hypo 1 is down here at the 21.19, but I'm really looking for a move down and then just basically rotation into the close. So hypo 1 is rotational day with a slight downside bias, with maybe a move down into the 21.10. Hypo 2 is an open auction in range, a push down into the 19, maybe 17 area, find responsive buyers down here, rotate back up through the overnight high, and take out this 31 and come up here and chop around in around this 40 area, and fill in more of this distribution zone around the 40.50. So hypo 2 is an open auction in range, and move down into the 19 area, maybe 17 area, find buyers, rotate up through 31, chop around, and then come up into the 40 area and chop around in this distribution zone around 40.50 and around the high of yesterday. Hypo 3 is an open auction in range, a move up, a failure to get above 31, finding responsive sellers, and then pushing down through into the 19, chopping around in the lower distribution, and then failure below the 07 and a push down into this 2098, 2097, and testing the 2000s for the first test below the 2100. So hypo 3 is open auction in range, move up, failure at the 31 area, rotate down, come down, chop around in the lower distribution, then failure down at the 2107, and a push through down into the 2000s. Hypo 4 is an open auction in range, a move down to the 19, find buyers, or possibly an open drive as well, but a push up, chopper early move up into the 31s, break the 31s, push up into the 41s, chop up here, and then get continuation and a move up into the 2151, 2152 area. So those are my four main hypotheses. Again, they're, all of them are going to be rotational. There's going to be two-sided trading as we come into quad witching, and regardless of whether or not we get a move up or a move down, you're probably looking at an average size rotation in the 5 to 7 point range. So just be careful and expect for a lot of chop like we saw yesterday. Take a quick look at crude, because we are coming into the crude announcement. Wrong one. Another wrong one. I can't find the right charts today. Okay, here we go. So bringing this in. Current balance right now is in the 45 area. We're below it. We do have a bit of a gap down so far. We're going to be opening up down here in the 44 area coming into the RTH session. It's going to be, I think we're going to see a lot of chop. We are still near the the composite VPOC up here at 46.73. This is the most traded price going back to the beginning of the year. So I don't think we're going to get away from this as quickly. I know some people are calling for crude to come down into the 38 area again, 39. That is a possibility, but coming into the news, I'm expecting chop, but I'm expecting a move today up into, if the news even is half good, I'm expecting a move in crude to come up into the 46.73 area and chop around here again. I don't think we're going to get away from this as quickly as everybody thinks. If we do get a move down, I'd be watching the 43 to the 42.93 area, and then if that doesn't hold, then I'm looking at targets at the 42.29, the 40.98, and then of course the 39.38 area down here where we were in balance for a fair amount of time down in this distribution here, and we've been down to it twice. So if we do get down here, I think there's a bigger dip in crude coming that could go a lot lower. Anyway, that's going to be, we just broke out, I missed it, I can't believe I missed it. We just broke below the symmetrical triangle and the key trend line right now, so I'd be looking for some continuation down now towards that 120 area in the ES. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.